Hello and a warm welcome to Talking Stocks. I'm Gugulethu, Cele. Also with me every week in studio, I'm joined by Armitage and Bryan Rudd from Anchor Capital. Now they are the experts, and every week we bring you insightful analysis into local and global listed companies. Now today we take a look at global technology companies specializing in internet-related services and products, Google. The corporation has been estimated to run more than 1 million servers in data centers around the world. It currently has a market cap of $362 billion US. Gents, this is quite a huge company. Google has become a very common phrase when people refer to anything that needs to do with research or searching for something. But do we really understand how big this company is, Bryan?
Good, exactly. This is a very big company. They are predominantly a search engine. They derive most of their revenue from search and advertising spend on that search engine. But they also have a few companies on the side, Android software, YouTube. But yeah, they are a search engine, and they have become the definition. As you say, we go, just Google it. And everybody goes to and knows exactly what it is. And this is a company that's defined themselves by one word on a big white website. That's all.
Exactly. But they also have all these other ad hoc things. You go into YouTube and it has your Gmail address there, as well as several other services.
Yes, they're very much so. They've taken the internet and internet-related services and put everything at your fingertips. You can have an email account. You can do documents, travel on the go. They're very much in the cloud space as well. So you're not storing your documents necessarily on your computer, but you're storing them in the cloud. That's why they have these massive server farms around the world in order to accommodate all of this. And then, as I say, predominantly they are the search engine though. So they're running all the algorithms in the background. You type it in, it's there instantaneously. If you pay a little bit extra, your name's at the top.
Exactly. But how does this relate to their revenue streams as well as the stability of their income, especially when it comes to advertising? Because not many people really understand the model, Peter.
So Google has got one of the best business models in the world. It basically is charging, it owns the viewer base, and that's through Google, the search engine, and through YouTube, which is effectively the biggest broadcaster in the world. I think people forget that as well. And because they've got that audience, they can then charge money to filter that audience through to you. So if you've got a website, you go and pay for some words or pay for some search criteria, effectively you pay Google every time somebody comes through. So they're simply a toll gate. If you view it like that, and every time somebody goes through, they take a clip from wherever the traffic is going to.
Is that stable though when it comes to its margins?
It's incredibly stable. I think where the business model gets so interesting is you continually have to pay more for the word. So if you've got a word like travel, so a generic word that you really want to go with, somebody else can bid on it, they'll present it to you, and you have to decide if you're going to pay more. So as long as they've got the traffic, it becomes more and more valuable, and as more and more people transact on the internet, get access to the internet, effectively it becomes more valuable to them. So that core business, runs at operating margins of around 40%, and that gives them the money to invest in other things as well. And this is a company that's changing the world.
Before we get into the other investments, I want us to go on to further products regarding the revenue as well as the gross income as well as paid for clicks. Clearly, the smartphone revolution as well as tablets have also made this another avenue for them to capitalize on this market on.
Absolutely. You're looking at people moving from the desktop. So they're now searching via mobile. And this is an area where Google still maintains a very high penetration into that market through the Android software. If you're not an Apple user, everybody else is pretty much on Android.
Or still stuck on BlackBerry.
Yes. Which is 80%. I mean, Apple's roughly 20, 25, depending on how to find it, but Android actually dominates.
Very much so. I mean, they're just shy of 80% in the space. So they've got that audience, and they also have an agreement with Apple in order to get the traffic from there as well. They also have recently launched Google for iOS. So they're actually bypassing Apple on the Safari side of things to capture that revenue. So on the mobile space, they're there. They're getting that information. People have still got it, and they continue to use it. They also dominate the web browser. So you have Chrome on your tablet, you have Chrome on your PC. So they're directing you at every single point to them. So I think they've pretty much covered in that space.
I want us to continue with the trend regarding ad revenue, and it does seem as though Google together with Facebook are actually the market leaders here, despite the competition from the likes of Apple as well.
Yes.
Yeah, I mean, Apple isn't really playing in the advertising space. I mean, they've had various attempts at getting different portions of the revenue. But Apple is very much a device and device-driven business, and they're trying to create revenue streams around it. Google is almost exactly the opposite, where they provide software and services and control traffic on any device, including Apple. So on my Apple iPhone, I go into Google to search for things. I go into Google Maps to look for things. So Google is across everything. So Google's across 100% of people have got access to Google, whereas Apple is 20% of the market. The top end, an attractive 20%, but fundamentally very different businesses.
That's it. You know, you've got Google dominating this space. Facebook is coming up, but Facebook is not permanently on somebody's phone, where that ability to get into Google always is. It's always on the front cover where you can click into your browser or you can do a search, where Facebook is an application that sits within that. So Google continues to dominate the space, and I think will continue to dominate for some time.
From a cash generative perspective, it does seem as though that has increased quite substantially over the last 2 years from a free cash flow as well as cash for short-term investments.
Yes, this company prints cash. They have been in a position, as Peter highlighted earlier, where they dominate the field they're in. And as people have moved away from the traditional media onto the internet and onto mobile devices, Google has captured that. In cash and short-term investments, they're sitting just shy of 60 billion as of the last financial year end. The new financial year ends at the end of the month. And they're already pretty much at that point again. So we can see that number jumping again into the end of 2014. They're putting 11 billion each year in free cash flow. We do see that coming down very slightly in the new financial year end, purely because they've increased spend on capital and capex. But I mean, this company just prints money.
Exactly. Well, from that perspective, then we know what the company does. People use it on a day-to-day basis. From an investment perspective, if you take a look at its PE history.
Yeah, I think we love Google. I mean, if in Anchor Capital portfolios, it's one of the first shares we put in. And it's a mature business. From a size point of view, it's one of the top 5 companies in the world from a market cap point of view. So it's not a small, and that's what's happened with these internet businesses. There's 5 big ones around the world, and they will continue to dominate. So it's a very different space in the risk-return matrix to where it was 10 years ago. So it's a big, stable business with $20 billion a year in cash that it's generating. And you're buying all of this at just over a forward 20 times PE multiple. So you don't have to pay the crazy Facebook, Twitter kind of multiples. It's a business where it's reasonably priced. And we've got some supreme confidence in its ability to grow over 10 years. And you have to pay 20 PE multiples for much less exciting businesses which have more threats to them. Relative
to the market, though, how does that compare?
You know, if we look at the market as a whole, it is probably trading at a premium. I think if we look at the MSCI World, that's roughly on a forward multiple of about 16, 17. So it is at a premium to the market. But if you look at that tech sector and the IT space, I think this is one of the more attractively priced. It's proven itself, and it continues to prove itself. You're getting 15 to 18% growth coming through a business that you're paying a forward 20 for, as opposed to a Facebook where your growth might be slightly higher, but you're paying this ridiculous multiple. I think Facebook's on a forward 77 price earnings. So it's mind-boggling. Google's gone through this. They're now mature, they're a quality business, they continue to deliver, and I personally feel attractively priced.
With the magnitude of this company and the maturity that you alluded to, Peter, does this make it difficult for it to become more innovative? We know they've got the Android system, they've got YouTube, but where to next for Google?
I think that's one of the things that excites me the most, is you've got this massive cash flow, $60 billion, you've got $20 billion a year in cash. And there's 3 or 4 companies around the world that are actually defining the future of the world, and that's one of these. Governments don't invent things, it's companies that do, and it's the companies that are generating the cash and afford to. And I think Google, right from the start, it's a business that's only 18 years old, but it's been an innovator, and they're prepared to throw a lot of money at trialing things. And you know, if you look at Google Maps and what you can do with it, if you look at driverless cars, if you look at Google Glass, you know, they're prepared to do things which might not appear commercial, and probably out of 10 projects, only 2 will make money. But those 2 will change the world and pay for all of the, all 10 of them altogether. So innovation is a key aspect of the business, and I think this is one of the great innovative businesses.
Would we expect devices to be another element that they might play in going forward?
Is they've looked at the Google Glass, and that's pretty much their device at the moment. A little while ago, they did buy Motorola phones, and they've subsequently sold that off again. So they're not looking at playing in the handheld device space. So they do have notebooks, they have the software on those notebooks, and then they have the Google Glass. But from a tablet and phone, I think they're staying away from that at the moment.
The only device that Google are going to come out is something that doesn't exist right now.
Yes.
It's like a Google Glass. So they'll only get into the device space, our perception is, where it's something that they've invented effectively. Yes. They're not going to go and become a manufacturer and compete with an Apple or a Samsung and the like.
Oh, that would maintain its competitive advantage then. But what about management? So often that does become an oversight for investors. Are you fairly confident in the group of people, the innovators that you alluded to that are there?
We'd be prepared to back some individuals who started in a garage 18 years ago and currently have a $360 billion business. So, it's a management team that's been innovative. They've been incredible at growing the business. Look, the initial founders, I think, are taking more of a strategic step. But I think when you've got a business this size and this kind of class, you can attract the best management in the world. So, yeah, I think the Google management team is broadly respected.
Well, let's get into that all-important question now where we ask our experts what their view is on this particular stock. Buy, hold, or sell? The all-important question, Brian, your view on this particular stock?
I think very much on the buy list. It ticks a lot of our qualities and our attributes that we look for. So it's a quality business, attractively priced, good cash flows, and in a very dominates the market. So I'm very much a backer of this business.
Peter, I'm sure you agree.
Yeah, it's a core part of any offshore portfolio. Buy it, and if the price comes down, buy some more. Speaking
of that offshore portfolio, how does one get exposure to that for the retail investor out there?
Well, we have 2 funds offshore. We have segregated portfolios. So one can open a stockbroking account through people like IG Markets or ourselves. We use Saxo and various other platforms, or in local unit trusts. So our business, together with most asset managers, have local unit trusts which invest in offshore shares. So that would have Google in the portfolio.
But for the average man in the street, currency weakness is also something they need to take into consideration here, huh? So have a couple of extra cents in your back pocket when you want to invest in Google, maybe?
No, I think it's one of those that when we look from a currency perspective, we're investing for the long term. So when we're looking through whether the rand is at 11.10 or 11.20, we're looking for the long term. And we feel that if you're trying to forecast currency implications and that, it's going to come out on the wrong side. So I would buy a quality business offshore for the long term and not worry too much about the rand exchange rate.
Exactly. Well, coming back, Peter, you always have a line. If you had to go away for 5 years, Google is one of those companies you'd want to put your money in.
Absolutely.
Exactly.
10 years.
10 years even. Well, that's where we leave it for today from our experts telling us that Google is a buy from every aspect of the share perspective. It is a quality firm. Well, do catch us again next time on Talking Stocks, where we reveal another company that you should potentially buy, hold, or sell.